All right, let's hit it. Okay, I hit the recording button, so we're all set there. And today is September 20th, 2023. Welcome to the Yummy Room, everybody. All right, we're going to review the overall markets. If you have any stocks you want me to look at, we have some time. I'll be glad to do that as well. Gene just put a link up to our YouTube channel. Make sure you definitely check that out because A, it's a fun channel, but B, every Friday we do Stock Analysis Friday. And we always, I'm telling you, we always get a good 2 or 3 picks that you could actually trade in the upcoming week. So kind of cool. All right, so Gene, any announcements you want to make before we get started?
No official announcements, but welcome everybody, and good to see Frank Heisman's from over the pond, and Panico and Lewis, and Alexander and John, and of course Jim Blue. So welcome to everybody. Back to you, Ben.
Okay, yes, and thank you. And yes, welcome everybody. Good to see everybody here. All right, so I've got my expensive mic I'm using today. So I bounce around between my expensive mic and the mic built into my webcam. And, sometimes the webcam mic is better. So you guys got to let me know if it gets funky on me, okay? All right, so markets kind of, I'll tell you, they're hanging high, but you have days when it sells off and then it recovers like today. And that's kind of been the story literally for like the last 5 months, up and down, up and down, up and down, kind of really a roller coaster. You have pundits that think it's going to sell off, and then you have some that think it's going to rally. So kind of hard to know what to do, but we're going to take a look at the charts where I have support and resistance levels. And I have to tell you, yeah, I have an opinion just like other people do of what I think is going to happen based on my analysis and what I've seen before. But the reality isn't the reality until it's reality, right? So what I've done is put some support and resistance levels up there. And the idea is that we watch the market and we see if our opinion becomes reality. And the only way we know that is when the market starts to move in the direction we think it should based on our analysis. So we kind of like trust and verify, kind of Ronald Reagan's situation, trust and verify. So we certainly need to verify any of our forecasts through price movement. So I'm going to give you some levels today like I've done previously for you to keep an eye on. And we watch those. That way when it does break, we don't miss it, right? It's pretty impossible, I think, to miss it as long as you're watching this every week and you're watching these levels. Then you'll have a pretty good clue of what's going on. So we'll take a look at those. All right, I have to go into the risks involved in trading whenever I do a webinar, and it's a good idea to let everybody know about the risks. Nothing is guaranteed in the markets. We work in a realm of probabilities, even when we have an edge in the market. It's like I tell everybody, when I trade the markets and I have my edge, bottom line is I know I'm going to win more often, kind of like a casino does, but I don't know exactly what trade is going to be my winner or loser. And so therefore you have to protect yourself on each and every trade with risk control, right? And so that's the idea behind a good risk control program. Also, too, you have to trade with money you can afford to risk. Otherwise, the stress level gets too high, all right? And then you start making decisions based on the emotions around that money you can't afford to risk. So you don't want to be doing it that way either. So key thing is have money you can afford to risk before you get into this business. And then once you do, learn how to protect the downside. A lot of trading is being able to survive to get to that big winner. And the problem is that we have to go through a lot of back and forth type of trades until we get the big winners, right? And that's trading. And so you have to be really careful on protecting those losses to make sure they don't become too big and dwarf your winners, right? So the old adage, let your winners run and cut your losers short, is the reason they say that. So very important stuff. All right, also too, if we look at stocks or if I share my ideas, run them by your financial advisor before jumping in with any real money or anything to test those ideas, because we want you to make sure that things we suggest here are suitable for you. We don't know your personal situation. A lot of factors go into that. your age, for example, your finances, how soon you need money you have invested or trading in the markets and things like that. So you kind of gotta talk with somebody that knows your personal situation. We don't, of course, so make sure you pass by any ideas that we share with you today with them, okay? Let's see what else I can tell you. Past performance doesn't guarantee future performance. That goes under the realm of probabilities. And so there it is, okay? And trading is hard work, okay? It's rewarding work, but it's hard work getting the edge. But once you get the edge, then it's just applying the edge as often as possible. All right, now we can help you. I've written quite a few books, and I'm writing my new one now. So my books on money management can help you in that area. I'm coming out with my new Art of Trading book, second edition. My publisher, Wiley, contacted me last year and said I need to do another one, so I'm doing another one. And it's actually going to be the best book I think I've ever written, because I'm including a lot of information since my first book, which came out in 2008. So there's a lot of new information, and we've developed some new software and techniques since then. So that's going to be in the book as well. The Elliott Wave Technique Simplified book continues to be one of the best sellers out there on the Elliott Wave. What I tried to do, and successfully I think so, is basically, Elliott Wave can be very complicated. If you've read any of some of the books out there, it's a lot of math. All right, and it is. All right, but what we've done with this book, and what I did with this book, is basically break down the Elliott Wave into some more simplified means which you can apply quickly on each and every trade. And when you see me look at a chart, you know, internally I'm going through all these things that I talk about in this book, and basically can look at a chart and in 20 seconds know whether to be long, short, or out of the market based on my software tools. For those of you visiting us that are new, I've developed software over the last 30 years of trading the financial markets. We call it the ART trading system, but it also includes other indicators and other software like the OWL, the PTF, TLM, and ERI indicators that we use to confirm signals generated by the ART system. Then we have scanners that take a look at finding stocks or whatever market you're looking at based on our type of analysis. And then we have risk control software at the bottom that helps you calculate your position size or trade size based on the parameters of the trade you're about to take. So that's kind of it. We have the Trader's Assistant, which is basically a advanced record keeping system, but it also analyzes your trades for you. So that's kind of a cool thing. All right, here's our first chart for the day. We've got a lot of information on our charts, and this is no different. So I did this one on Sunday, and those of you that are subscribers have already seen this because we released it on Sunday, so you're ready for the trading week. All right, so I'm going to take it from the top in the upper left here. Right where my cursor is here, that starts 2022. We reached a significant high in the markets. It had just finished roughly a 13-year bull run. And there are numbers and letters on this chart, and that is the Elliott Wave. And what I've done on some of these letters, the letters are basically brought over from the weekly chart. So those are more higher time frame correction letters, corrections of the Elliott Wave. You have it represented by the alphabet. In terms of impulsive waves, for the most part, they are numbers. So you have 5 waves in a trend. So on the daily chart, we ended wave 5 here. All right, that ended a wave 3 according to the hypothesis on the weekly chart. Then we had a change in trend on the daily chart. You can see it here. 1, 2, 3, 4, 5 waves down, and that represented a corrective wave on the weekly chart called A wave. So that's normally during a correction you just have an ABC. All right, it's called a zigzag normal correction, and it reaches a fib retracement area. So that was the A wave. Then towards the summer, we had a move up that created a B wave that stopped last September. And then we had a big sell-off, which we expected, C wave. And C wave really didn't pick up too much steam, but it did take out the bottom of A wave. And then it kind of failed. All right, popped up, went down, big bottom, boom. Then the market took off. Not your typical correction. All right, so If this was an ABC normal correction, C wave should have kept going to the downside and reached the fib retracement zone. And I'm going to show you where that is in just a moment. But it didn't, okay, so it failed. So then it went up, and when prices went above B wave, now you're entering into an Elliott wave count called a complex correction. And complex corrections are complex. And hence, look at this. Look at the mess we've been in. But it does create an uptrend here that has not yet really completed, and that ended maybe in August of this year as the top of D wave. All right, we're kind of watching like that, like a hawk, because if that is the top of D wave, then that means we're in the beginning of a major sell-off represented by what would be an E wave. All right, but a lot has to happen for us to build confidence in that forecast. So we have to go down and start breaking some of these support levels that I have in order for us to have reality match our forecast, right? So that's kind of where we're at now. The longer it goes sideways, the more we have to sit here and twiddle our thumbs until it finally decides what it's going to do. Now, could it make another high and go above D wave? Sure. Okay, anything's possible in the market. Sure it could. And that would be D wave continuing. The only thing is if that happens, then we've got to watch the all-time market high, which is put in way back here where we have 5 and 3, okay, of 36,952.65. If we break that, then this correction is done, okay? We're on the next leg up, and this will be deemed as a minor correction, and we're still in wave 3 on the weekly chart. I don't think that's going to happen. Here's my opinion. I don't think that's going to happen. I think we're in a classic long-term bearish market that will end badly. That's my opinion. All right, again, we'll see what the actual market does, but if it starts breaking those support levels, I think my opinion will start to gain some credibility, so to speak. So we'll see what happens with that. Now, if we break this support level, okay, that's bearish. But if we break this one down here at 31,429, that's a change in trend for sure. Okay, and that's something we'll take note of. Then we'll probably attack the bottom of C wave, and if we take that out, then it's look out below. Okay, then that's a confirmation of E wave. So those are the support levels I want to give you guys so you have to watch. And now we just basically are like the tail on a dog, okay? We're going to follow the dog and see which way it goes, right? And so that, as traders, that's the best we can do, really. Okay, now, this is the 60-minute chart that I like to give you guys every Sunday. Why do I do this? Why do I give you a short-term time frame? This is, you know, every price bar represents an hour here. Why do I do this? Anybody? How is this useful? I've shown you the daily. Isn't that good enough? Why is this useful? You tell me. Thank you, Perry. Excellent. Perry says it shows what the week ahead might look like. Exactly. And so, you know, in terms of when you look at a shorter time frame, you're going to have different, usually, not always, but different support and resistance levels. And so they are shorter term. So if we're looking just for the next 5 days, let's say it's Sunday when this chart comes out, and we're just kind of saying, well, what's the week going to be like? Well, when we look at some of the support and resistance levels put in by the previous week, we kind of get an idea of if we'll have a breakout above one of the resistance levels from last week or a breakdown. And that'll give us an indication of whether we're going to be bullish or bearish going into the week, or more of the same. If we stay inside the short-term resistance and the short-term support, then that's kind of like more of the same, right? Just kind of a neutral week. You'll have up days, down days. But if you have some major breakouts or breakdowns, then this chart will be the first one to let you know that. Okay, so that's why we do that. All right, now, I don't usually show this chart, but I'm going to give it to you today because I think it's important to keep this in mind, because you hear about me talking about the big sell-off on E-wave. All right, so this is the Dow Jones Industrial Average long-term chart. And this goes back to 2009. Now, if you're a more subscriber, we also give you the charts for the NASDAQ and the S&P, right? So this one I'm just going to show you today, all right? Dow Jones, all right? Big bull run. Here's our wave 5 on the daily, wave 3 here on the weekly, and then the ABCs. Remember, we saw those on the other charts. And so we're kind of lingering up here. Now, if you draw a normal Fibonacci retracement based on this bullish run that we've had, it puts the target, a high probability target of a correction area between 38.2% to 61.8%. Now, in terms of price on the Dow, that's 23,273 down to 15,014. Okay, that's the range that E-wave could end up in. All right, we've got COVID low right over here. Okay, do you see that? All right, so the COVID low turned one of our indicators called the PTF right here bearish. Now, when that's red, that indicates there is a 75% probability that during the next correction, we're going to go below that. Not 100%, but 75. So if indeed this is a long-term complex correction, then we should work our way below that. And so my target for the Dow correction at some point is 18,213 down to about 15,014. So quite a sell-off, okay? But in regards to how bullish the market's been, that's really not unusual to have some type of correction as well, okay? All right, so that there you have it. So that's kind of what I'm looking at here. And you can certainly see we're nowhere near the target. And even if now we make another high, well, we didn't come even close to the low probability area, so that means this 3 wave continues. So if we go above the 2022 high, I'm going to slide this 3 over and say we're still in 3. And we've been in 3 now for 15 years instead of 13. I don't think that's going to happen, okay? But I'm sticking with my opinion, my forecast, until the all-time market high is taken out, okay? Because in a complex correction, you can come almost all the way to the top of where it ended in 2022 and still sell off and be a double top, right? So you're not really going to know that my opinion's wrong until we break the 2022 high, okay? So that's kind of where I'm at on that. Now, what happens in a complex correction is that it pushes the time, okay, forward to where the actual target will be reached. So if you had asked me a year ago when I thought we'd reach the wave 4 target, I would have probably said this right around now, okay, at the last quarter of, or last half of 2023, okay? So that didn't happen because then it went into a complex correction and that delays everything. All right, so until we start breaking some of those support levels, it's really tough to give you an exact time of when we're going to reach this low target zone or if we're going to reach it. And so I'm saying if it sold off today, you're probably looking now not at early 2024, but you're probably going to be looking at, I would say, sometime later in 2024. And this chart indicates, you know, this chart was done June 4th, and we'll be doing these again soon, by the way. But these long-term charts we don't do every week. All right, so these, you can see where we've meandered back and forth. And what that does is it delays the amount of time it will take until we reach. So I'm saying probably, you know, if it's sold off big time today, you're still looking probably in the last half of 2024 before we could get down here. All right, so that's kind of where we're at now. All right, Alexander's, what do I think is going to be the catalyst? That crystal ball I do not have, but it could be anything. The funny thing is, if you know, and I've shared this before, so I don't want to bore everybody, but the funny thing is back, if you remember the .com bubble in 2000, okay, we were watching that, and you know, we thought 1998 was the first pretty significant sell-off we had seen in the 90s. And we thought that might have been the beginning. Then it made another high, all right? And we just knew that we were so close to a wave 3 top back then in the markets. And then it did burst, and then it came down. And part of it was the dot-com thing, but it was a multiple things. We had predicted that the March 2023 low would be the Fib retracement level, and it hit there, but it took 9/11 to get there. So my point is that we're never sure really what can cause these things, and sometimes things come out of left field that we don't see, okay? But you know, the fact that the market is kind of trending sideways, it doesn't take too much bad news for it to get off-centered and sell off, okay? So not sure what will happen, but there are some things out there that could, okay? There's a lot of uncertainties in different areas, okay? Let me talk a little bit more about housing. I've got a few minutes left here. This is the CPI line up here versus the, well, this is CPI versus the Case-Shiller home price index. Now, in a healthy market, these lines are kind of close together, all right? Look at where we are now, okay? And what this is doing is building the case that the real estate market is headed for a massive correction, all right? Maybe it'll come when the markets sell off, who knows, all right? But I'm thinking you've got to come down at least 40% on real estate to get back in line with that CPI number, okay? So that's a pretty big deal. And again, it's still hanging, they're still hanging pretty high, and I know supply is low, and we've talked about this before, and demand is low right now as well, which is kind of what's keeping things just hanging. But if you look at real estate, and really two main factors affect real estate, okay? The affordability of people being able to buy it, right? Okay, so wages, and interest rates, all right? So interest rates have gone up, but you know, historically, even though, you know, it's 7 3/4, everybody thinks, oh my God, that's awful. It's actually, if you go back, these interest rates now are not terribly high if you consider the historical interest rates going back quite a ways, okay? The problem is everybody's used to free money, okay? We had a period after COVID where the interest rates went almost to zero, for God's sakes, right? Okay, that's not normal. And so now they're getting a little bit more normal. But the problem is that real estate right now is just not affordable for anybody. So now you have a wage problem, okay? The interest rates don't concern me except for the fact that, yes, it does cost more to borrow money, of course, okay? But the problem is that I don't think people can afford a home for the most part. Many people, majority, at this particular time, and interest rates aren't helping, even though they aren't historically super high, okay? They're higher than they were years ago, and wages haven't come up that much. So I think that's the problem. But in this case here, if you even talk about people entering the workforce, you can't even get the average price. 60% of the homes in California are over $1 million, okay? So you're telling me somebody out of college is going to even have a chance at living in a decent neighborhood with that, okay? You know, you'll be lucky if you can get a house at $150,000 or $200,000, all right, on a starting salary, right? So that's not going to buy you much. So it's a pretty tough situation. And then you have the situation of, you know, should I rent or buy? So a lot of factors coming into play. But the problem here is that if people can't afford these, and you know, rents, people start losing jobs. If we go into more of a recession, people start losing jobs, then you got a problem, okay? Then real estate's going to have to correct big time, because also to the Airbnbs and the rent, they won't be able to get the rent they want. People will start liquidating their investments because they're not making any money on them, and that's going to increase the supply. And at that particular point, you might have more supply than demand until prices reach a certain level. So that could bring it down, all right? That's a guesstimate. But anyway, I'm concerned about the real estate market, obviously. All right, guys. All right, so don't forget client support in about half an hour. So anybody that has any of our products, whether it's a home study course, the risk to reward calculator, whatever you got, All right, software, you are entitled to come to the client support meeting free. Okay, that's something we do every week, and I'm the only one that does it, and I'm there to answer your questions if you're having any problems. Okay, and like Gene says, it is great to see everybody here.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.